Hey, Patrick, thanks for joining. I've been a fan of your work, and you do a lot of tweets. Maybe tell our audience a little bit about kind of how you got engaged with the crypto community, how you started building up a following, and then maybe just a little just a quick blurb about your background.
First, high level, what I do now is I make, I would say, educational and informational content about the crypto industry. I do that. Twitter is actually my largest platform, but I think of it more as my focus is on doing that through newsletter and YouTube, and been able to do that pretty successfully because I think people like that I take a focus on the analytics of crypto projects with a focus on fundamental analysis and on-chain data rather than just trying to hype things up, right? And so, it's easy to get a lot of attention in crypto if you just focus on saying I'm calling tokens that are going to go 100x, but then you're really getting, I would say, low quality audience, and you're not really adding any value. You're actually taking value away. So most of what I do is a combination of reporting on-chain fundamentals, as well as creating educational things about how to use some of the various DeFi applications. And so I've been pretty successful with that. I've got about 90,000 followers across all platforms now, which is, to me, mind-boggling because I started doing this about 2.5 years ago. And at the time, it was mostly just a hobby, right? I was investing in crypto myself on the side, and my 50-year-old dad was interested in using some application, and I couldn't find a tutorial for him. So I said, okay, I'll just record one myself and put it on YouTube. And I went through a Scrabble dictionary of words that started with D, chose Dynamo because it sounded cool to go with DeFi. So I said, okay, I'll make a YouTube video under the name Dynamo DeFi, showing people how to use this app because I couldn't find one to send my dad. And shockingly to me, I checked back a couple months later and it had 500 views. And at the time, and now 500 views is like, if I don't get 500 views in the first day of posting a video, I get upset. But at the time, I said, wow, 500 views, that's crazy. I should make some more videos. So I just started making those kinds of informational, educational videos. I gradually improved the quality over time. At the start, it was just there was no camera and I was using a cheap mic, just doing it for fun. And then gradually reinvested into getting nice mic, nice camera, good editing setup, hiring an editor as well. And really just taking it as far as I can from there.
What's the big mission?
The big mission. I guess the question is it mission or goal, right?
Either one.
For either one. Mission, I would say, is to become one of the main content sources that's onboarding people to use decentralized finance applications. That's the mission, right? In terms of what I'm doing. And generally, I found the more I can actually provide value and help people who want that sort of thing, the more my following grows. So it's good for me too. In terms of goals, yes, I have some goals as far as, I'd really love to get to, say, 100,000 YouTube subscribers. I think that would be great. Right now, I have, for example, the rank 40th paid crypto Substack. I'd love to get that into the top 5. Really, the higher the better. But I think I'd be happy if I got in the top 5.
Yeah, well, certainly. You and I had some conversations around this, but look, this is a Contrarian themed podcast. I run a crypto fund. I truly believe that crypto is one of the most attractive contrarian investments today. Let's talk a little bit about what drove you to the space. And then, you mentioned DeFi. There may be some users that don't really understand DeFi or
Yeah.
are kind of new to the asset class in general. So let's talk a little bit about that as well.
Yeah, totally. All right. Yeah. So what drove me to get interested in crypto in the first place? So first exposure to it back in, I guess it was back in 2015. Unfortunately, I didn't invest at all. But so 2015, I was finishing my senior year studying econ at Harvard, and a friend who was a computer science major told me, he said, hey, my buddy's got this crypto hedge fund. They're looking to hire people, and he knew that I was interested in not going to the traditional route that most people would take with that background, where they would go and work, for example, at a investment bank or something. Um, and the reason I was interested in that, which I guess plays into contrarian investments, is, when you're studying econ, they tell you over and over again, you can't beat the market, efficient market hypothesis, et cetera, et cetera. But my thought was, if everyone's interested in the same things and everyone's going into the same fields, then there's probably actually a lot of opportunity uh, if you're willing to apply that same sort of rigor to something that nobody cares about. Unfortunately, I didn't decide to do that with crypto back in 2015, because if that was the case, I'd be retired by now. But that was my first exposure, and then continued on doing some other things, going into the packaged goods industry, doing corporate finance, and then back in 2017, I got exposed again, like many people do, where prices were going up. Coworker was trying to sell me on it, and just started playing around with it then, and truthfully didn't do too well in 2018, right? Made all the mistakes that people who are new to the asset class make, including a lot of professionals, right? A lot of professionals I know make major mistakes where they get in when it's already in the news cycle, which is not when you want to get in. You want to get in when everyone thinks it's a joke. And so I rode it pretty far down, kind of lost interest in 2019, and then 2020 again, like many people, stuck at home, started playing around with it, started using some applications, and so that gets us into what exactly is DeFi. Before There were some before this, but really before 2020, if you're using crypto, basically you were just holding it in a wallet. All right, I've got my hardware wallet right here. You were holding your crypto in there, and you could transfer it to other people. You could transfer it to an exchange. You could trade it, but there wasn't really that much you could actually do with it. Starting around 2019, 2020, a lot of these blockchains started to have applications on them. So they have smart contracts on the blockchain. So basically, you can deploy an application to the blockchain, then people can interact with it. And this application could be something as simple as borrowing and lending funds. It could be something more complicated, like a decentralized exchange. So you're swapping funds directly from your wallet with no centralized entity that's custodying it. Or it could be something even more complicated, like a game, right? And so those things started to really pop up in 2020, and I got really interested in that because, well, for one thing, it's fun, and for another thing, I started to see how, okay, uh, this is for more than just currency, right? People say cryptocurrency, but it's really, digital assets is maybe more appropriate, or I mean, some people think the term blockchain sounds too much like corporate speak, but it's really more accurate than cryptocurrency, because the vast majority of things that are built with crypto and blockchain now aren't actually currencies. It's, for example, I was using an application today where I had a certain token that I hold, and it went up in price. I didn't really want to sell it yet, but what I could do is I could provide it as collateral, and then take out an over collateralized loan where I borrow 20% of the value of the token. And that happens within 10 seconds, right? The time that it takes to send a transaction. So there's actually there's no process for needing to go through the normal paperwork, because it's over collateralized, and they can verify that you have the assets you say you do, because it's all in the blockchain, and then they can basically hold those assets in place until you repay the loan. And so those sorts of applications started to pop up in 2020. I got really interested in going down the rabbit hole of what was possible, and then that brings us back to mid 2021, like I said, when I made my first video showing how to do it, and then just took it from there.
Yeah, it's a great story. I mean, to summarize, and I think a lot of people in crypto and that have done contrarian things kind of resonate with this, but you're in school, you see a path to go do what everybody else is doing. That's not interesting, but usually at that point in your career, you don't know enough of like what the other options are, right? And a lot of life is just figuring out all the different things you can do, and then choosing them. So you went and did some traditional things, and then saw crypto, and it kind of set off this light bulb of, oh, this is the thing I've been waiting for. This is the not mainstream thing where I can get outsized returns, and I can also flex kind of my intellectual power acumen, if you will.
Mm-hmm. Yeah, that nails it.
Yeah, I mean, resonates with me. Like I think a lot of people in crypto go through that. And I also think a lot of people in crypto do really poorly the first few years they're in it. And
Hmm.
that's kind of like table stakes. And I've found that in a kind of a beautiful way, it's, it's what people basically what they end up doing is they have to learn about why did I buy this and why do I own it? Um, because like you can buy it, right? Just like a stock that everybody says is, is hot or whatever terminology somebody would use, and somebody would go out and buy it, and then the stock would go way down. Now you have to go and kind of do your homework and say, is this ever coming back? Is there
Hmm.
legitimacy to this asset? Is there real utility to what the company's building, or is it bringing value to the world, et cetera, et cetera?
Yeah, absolutely. And that's, the first mistake I made in when I first started buying them, like a lot of people, is I basically bought what was already popular, right?
Right.
And then, especially if you're doing that at a time when crypto has reached the mainstream, then you're buying things that are already quasi mainstream, but they won't be for long. Uh, and the beauty of blockchain, and this is really what my services I provide now focus on, is that any financial metrics for an on-chain application, they're available in real time, and you know them with close to 100% certainty because they're actually recorded on the blockchain. So if you have an application, for example, that's deployed at, on chain, then you could know the revenue that it's generating in real time. If it's a financial application, you can know the deposits into it in real time, and then in many cases, you actually can know the treasury of the company that's backing it in real time.
Yeah, you make a great point. Look, most people don't realize this, right? So most people from the outside world look, I think, at digital assets and they wonder, is it all a Ponzi scheme? Is it just all hype? And they don't realize not only that there's a lot of fundamentals driving overall market movements and project specific movements on a long enough timeline. Obviously, you can have, some sort of pump or something where something just got a lot of attention, but also you can have insane transparency, right? So as a venture capitalist, you have to ask for financial numbers, you have to assume they're correct, and then you have to ask for operational metrics, right? And on the blockchain, all that's available to you if the protocol is set up on the blockchain. So, like you said, you can not only see how are they performing, where is the money going, how much money do they have left in the bank, how much are they paying their members, but you can also see things really easily like how many users are new to the platform, how many users or existing users returning to the platform. You can get a really good idea of growth, traction, and if they're keeping customers or if they're just kind of like a flash in the pan success. And I think most people don't realize that. So I wanted to highlight what you said. I think it's insanely valuable.
Yeah, it's extremely valuable, and it's actually only becoming more valuable because now there's other services that are being developed. For example, you mentioned users, and the question would be, of course, okay, well, are those real users? Are they bots? Is the project inflating it themselves? The first thing is because it's on the chain, you can actually see the how much money that each of those users is holding on chain, so you can get some idea of how valuable they are. But there's actually services now that are starting to link that into traditional, what people would call Web 2, but really just traditional online data to actually find out more information about who those people are, what their interests are, as well as whether they're real or whether they're fake users.
Right. Yeah. Super powerful. I mean, I think the perception is crypto is more secretive, right, than traditional finance and Web 2. And when we say Web 2, we just mean companies that rely heavily on the internet to sell or to build their product, right? Like all the companies that we know of today, the Googles and the Facebooks and all the major companies in between. But in reality, it's actually the opposite. And it's like, I mean, a way to really even enforce this is how most people perceive that crypto is a really good tool for money laundering and illicit activities, but it's a horrible tool because you can track exactly where the money's going. You can block those addresses so those people can't actually get access to the funds. There's a lot of misconceptions, I think, about the space in the sense of
Mm.
secrecy or illegitimacy. As you're trying to figure out which projects are legit and you're forming your investment thesis for the sector, how important is your investment network in shaping your contrarian views, and how do you cultivate that network?
That's a good question. I would say the network is very important because a lot of times first thing I'll do is when I find out a project, I have my core group of people I've met in the industry over the past few years, and many of them are people, in terms of how I built it, it's people who I either did some sort of advising for some project they were working on. So, for example, there's one project I was helping them assess the risk of their strategies with these decentralized finance applications. And so I talk to one of the founders of that all the time. First thing I'll do is ask, hey, do you know anyone who's involved in this project? And then if they don't know, second thing I'll ask is, what do you think about it, right? Do you notice any red flags that I don't? And sometimes people do notice things. Sometimes they notice things that turn out to not be a problem. But usually just sending it to that core group of 4 or 5 people is one of the first things that I do to get a feel for it. The other flip side is then a lot of those people will send me things in return when they find something interesting. So in terms of sourcing things, it makes it way easier because I no longer have to spend nearly as much time digging through stuff myself.
Yeah, it's like you and me have actually done this, right, in our intro call, where if you're at a certain level where you feel somebody really has the dedication and expertise in the space, usually they're focusing on one specific niche, and it's really helpful to bounce projects off of each other. And as new projects emerge or you discover something that may be interesting, it's so helpful to send that out and get feedback from your network. Why do you think the average person today, so I mean, crypto still contrarian, right? Still a lot of people that don't understand it, aren't in it. I think there's like maybe 300 million people worldwide, that number fluctuates, but utilize crypto. So that's a small percentage, right? That's just like 3 to 5% of the world's population. So why is that still the case, and what do you think is going to bring the next billion users to crypto?
I would say it's still the case because it's really only been they're still working on it, but it's really only been the past couple of years that they've actually built the infrastructure to have applications that will that are usable by a majority of people. For one thing, the UI has been terrible up until now. It's just been you have to go through 5 steps to do anything, and if you make a mistake, sometimes your funds just get lost. Not to mention the fact that there's been so many hacks, but there's been so many improvements the past couple of years in terms of security and in terms of more seamless user experience. So I think those are kind of the prerequisites that have to happen. And the other prerequisite is you need blockchains that are actually fast enough, right? You have a lot of these chains like Bitcoin, which Bitcoin is great and has its use, and I think it's still still the most likely coin to actually be around, say in 10 or 15 years. But the problem is a lot of the throughput on these chains that are older isn't actually enough to accommodate, say, an application with 1 million users. So you need a chain that has dramatically higher throughput to accommodate that. But all that infrastructure's advanced tremendously over the past couple of years. So I think what it's going to take is it's going to take some application whose use is self-evident, right? It took something like ChatGPT, for example, to really catapult AI into the mainstream consciousness, where the average person who was using it was no longer someone who was already working and really deep into tech. Now I know people who, for example, I know a guy who owns a landscaping company that uses ChatGPT, right? And the idea of someone like that using an AI application daily 2 years ago would have been unheard of. So really, you need something where the benefit is self-evident. And as far as where that comes from, I actually think that one place it's very likely to come from is that crypto and blockchain can mediate a lot of the worst aspects of AI. So, for example, with AI, you have a major problem now of deepfakes, and there's regulation that the government tried to pass a couple of days ago that would try to tamp down on the creation of deepfakes. And if someone doesn't know what a deepfake is, basically using artificial intelligence, you can make a video that looks like someone is saying something that they're not, and it looks oftentimes almost as realistic as a real video. You might be able to fake a video, but you would need to spend hundreds of billions of dollars, for example, to take over the Ethereum network. And so if you had something that was a transaction that was signed on the Ethereum network by the public address of the person who was in the video, verifying that it was real, then you could actually know which videos were legit and which were not. So I think that really what it's going to take is the combination of those things I mentioned before, combined with AI continuing to grow to make blockchain go mainstream.
I agree completely with you. There's a lot to unpack. Maybe let's start with like a really simple question just for the audience. How would you
Yeah.
describe Bitcoin to, let's say, your grandmother?
That's a good question. Um, that's a good question. Funny story. My grandpa's 90th birthday is in a few weeks, and when he um, last year he called me because he heard about the FTX thing and wanted to make sure I wasn't going to get arrested. I said, let's to talk about the mainstream perception of it.
Right.
But basically, the way I would describe Bitcoin to, say, my grandma or to my grandpa is that it's a form of, I mean, at a high level, it's a form of electronic money that doesn't rely on a bank or government to guarantee it. And then there's a
Yeah.
lot, you'd probably get a lot of follow-up questions from that, but that's in a sentence what it is.
Yeah, and I think, the fact that there's this thing called the blockchain or the ledger. I heard a description once. It was from a VC a while ago, but the analogy was if you and me and everybody in the world had a magic book, and if I did business with you, so I gave you $10 and I wrote down, I gave Patrick $10, that would appear in everybody's book magically. And so, of course, if, people had kind of been overseeing their book in general, and they just suddenly noticed that I wrote you $1 million check, and they were like, oh, I didn't know Mike had $1 million. Then they would easily be able to point out that's probably not real. And I think the reason why I wanted to visit that, not just Bitcoin, but the ledger, is everything we're describing, right, about why AI would need to utilize blockchain and why it makes a lot of sense is really because, as you mentioned, AI is better than probably anything that's ever existed at creating things that aren't true or faking things. And you need an immutable database, and immutable is just a fancy word for not easily changed, or, essentially fraud can't exist on it. And you need kind of like that core technology in order to go out and let AI do lots of different things, eventually do business with other AIs, automate a lot of processes. You need there to be trust that the information is sound and that the transactions will go through, and that there's not some AI mastermind faking the data behind the scenes. And to your point, we talked about this in person, but I don't think a lot of people realize that how ubiquitously AI and crypto will probably merge, right? How the technologies will utilize each other to do really amazing things.
Yeah, absolutely. To what you were saying about the magical book, there's some people who call blockchain triple entry accounting. I don't know if you've heard that term before.
Yeah, I love that term.
But yeah, there's some people who call it triple entry accounting. But yeah, I mean, at its core, what it's doing is it's recording proof of ownership in what's real. So much of that so far has been used for toys, right? You have, for example, the NFT craze that a lot of people probably heard about in 2021, basically using that ability to confirm electronic ownership of something to confirm ownership of things that were not really meaningful, like pictures. But if you take that same ownership, you, for example, could confirm that you own the rights to something and then actually have some mechanism for granting those rights or selling them. Or you could confirm that you could have ownership of data that you can then sell, or you could, like you were mentioning, for example, with AI and the deepfakes, you could actually record ownership of your own features and voice and everything, and then have the mechanism to lease that out to people, and you would record that ownership that couldn't be replicated elsewhere on blockchain.
Yeah, that's fascinating. What is your, let's share a little bit of war stories here. What's your biggest screw up in crypto?
Ooh, I don't want to say there's so many, but I mean, there's, you
No, there's probably I mean, if you've been in this
yeah,
space for a while,
if you're
right?
doing it for a while, you end up making some screw ups. Mm.
And by the way, while you're thinking of that, I just
Yeah.
want to iterate. I've said this before. The fascinating thing about crypto and why I think it draws a lot of the world's smartest people is if you think of like a Malcolm Gladwell type definition of an expert, right? So 10,000 hours or somebody that's been doing something for 10 or 20 years, there really are no experts in DeFi. There are no experts in crypto. And so everybody's learning while they're executing. And while that is where a lot of the opportunities for upside come from, mistakes are just part of the game, right? Because there's no just like playbook that's been tested over decades that somebody says, go execute. It's not all like, I think to be in the space and not talk about the mistakes or pretend there are none means you're not really in the space.
Yeah, totally. I mean, it's just such a new technology, and yeah. So as far as my biggest mistakes, though, I mean, my biggest mistake would be the missed opportunity, for example, of stopping to pay attention in 2019. Right, that's when people were getting involved in applications or working for different sorts of projects and just getting in really on the ground floor of so many things. But in terms of biggest mistakes in actually in the market, I was lucky I didn't get caught in Terra and the UST collapse. For people who aren't familiar with that, that was a coin that was supposed to be $1, and basically it wasn't backed, and it went to zero from $1 in less than a week. So that was catastrophic for a lot of people, but thankfully I didn't get caught in that one. I also didn't have any funds on FTX, so I didn't get caught in that. Most of my biggest mistakes, or you could call them horror stories, war stories, whatever you wanted to say, basically were when I over allocated to some new project uh and usually it was when it had good fundamentals on the face, but the team was anonymous. Not that I never trust anonymous teams, but I would say most of my biggest mistakes in 2021 were when the team was anonymous. For example, there was this one NFT exchange called Looks Rare. It was doing incredible numbers. I think it was for weeks. It was the number one crypto application by revenue. Totally anonymous team, and the team didn't actually scam anyone, right? So I don't want to imply that they did, but basically, I looked at the revenue number, so I said, okay, this the fundamentals are solid, and the mechanism that was generating revenue was really set up to benefit the team more than token holders. And so that ended up being a pretty poor investment.
Yeah, I think that's a standard one. How do you approach diversification of your portfolio today? And what sectors are you really excited about coming into this next cycle?
Within crypto itself, or within crypto?
Let's talk both.
Yeah. So I guess, in terms of crypto and not, I think of it as a barbell strategy, right? Where crypto is probably aside from some things that are really out there, I would say one of the riskiest asset classes in the world. So everything else I do, I'm not trying to also buy tech stocks, especially when I'm so deep into crypto. I'm keeping it very safe in either real estate or your traditional boring value investing type companies. So that's in terms of crypto and everything else. Within crypto, really focused for this next cycle on the core infrastructure plays. So those would be some of the chains I talked about before that actually have the ability to build applications on them. You also have some projects now that are building that link between traditional financial institutions and blockchain. And I think you've started to see a bit of a renaissance of that the past year, where you, for example, have billions of dollars of treasuries that are now tokenized on chain. And for people who don't know what tokenized mean, basically it just means recording ownership of some asset that's off chain in the real world on chain, on the blockchain. So that way you can get all these benefits we talked about, like the instant transactions, the ability to interact with these instant lending applications, the ability to provide to market make automatically, and all those sorts of things. So I'm also interested in the projects that are building infrastructure to make that possible. And I mean, there's other things that sometimes pique my interest. Well, the AI would be the third one that is really interesting to me. And then most of the other ones that I kind of am aware of. For example, there's people who are building gaming or entertainment or gambling applications on there. Those are great, but that's not really my specialty. And although it's still crypto digital assets, so I'm more informed than the average person. I feel like my edge really is in sticking to the specialty.
Yeah, we got to go deep, for sure, in this space, and that's why it helps to have people that are focused on different sectors. You and me had this
Yeah.
conversation a little bit before the recording, but I want to talk about real world asset tokenization, what you mentioned, moving
Mm.
traditionally off chain assets on chain. I think that's a big one, right? I mean, you started to see different protocols enable treasuries to be on chain. And, for our listeners, it's never been easier to get in a treasury than on chain, where, in a few minutes, you can be earning that 5 to 6% interest that's backed by something real, right? So a lot of the interest in crypto is generated by new projects coming to market, launching their tokens, and kind of saying, "Hey, we'll distribute for you doing something on chain or supporting our protocol. We'll give you some of our token." Or another analogy would be if a company said, "We'll give you some stock," right, or something of value, a coupon for doing some business with us early on as we're trying to get launched. But like obviously there's been a lot of question of like how sustainable is that and different things like that. But real world asset tokenization is exciting because you're pulling that the returns, like for instance of treasuries, and you're able to pass that on, but you're also able to like easily get people in and out of that asset. Like, let's talk a little bit about that, educate our viewers, and our listeners, because I think it's super exciting. And to your point, I think it's going to come way faster than people think, as large financial institutions realize all the
Hmm.
benefits of doing this.
Yeah, totally. So I guess just to highlight high level some of the benefits that would come just from the fact that it's on blockchain is 24/7. You could transfer it. You could access it. You could send it to someone, and it would usually finalize within a couple seconds. In some chains, it would finalize in less than a second, which which is something I guess since I do so much business directly on chain, I didn't fully appreciate, right? But if you're making a payment to someone and to have that settle instantly is actually pretty incredible, especially if it's any time of day. And then you have the actual applications that are built on the blockchain that you can do with smart contracts that let you actually use those assets in ways that would be either very complicated or impossible traditionally. So you have, for example, that thing I mentioned before, where you can, if you have a money market that's been set up on chain that accepts that as collateral, you can provide the asset as collateral. You can borrow against it without actually selling the asset, and you can do that literally in a matter of seconds because there's things called oracles that basically verify the price of your asset. So that way, the money market is able to instantly verify, okay, this is worth $1 million. It has sufficient liquidity, so we're going to allow this person to borrow $200,000, and that's pretty incredible. Uh, that's pretty incredible on its own. And then the other thing that's really interesting that you can do on chain is there's things called automated market makers, sometimes called decentralized exchanges. The largest of these is an application called Uniswap, and so far it's mostly just been used for crypto tokens. But so for example, swapping Ethereum to wrapped Bitcoin or Ethereum to USDT. But you can actually use those same applications to swap, for example, a tokenized treasury for a tokenized dollar. And then anytime someone makes that swap, they're paying a small transaction fee. And if you're willing to deposit assets into a it's called a pool. Basically, if you're willing to deposit 50-50 of both those assets to provide liquidity for people who are swapping, then you get a portion of that transaction fee. So once you have a lot of assets tokenized, it basically opens up the opportunity to turn assets that either are not yield bearing, obviously treasuries are, uh, or assets that are yield bearing, even into assets that are bearing yield from this alternative source where you're actually using them to provide liquidity and market make for people who are swapping between them.
Yeah, it's it really like hits the crux of the question, why diversify in the space, as you start to talk about the use cases. So for example, we talk about real world asset tokenization, and I think what helps a lot of people is examples. So it's, hey, there's this amazing real estate property in Malibu. I think it's going to do awesome, but it's $10 million to buy it. Oh, well, it turns out that they put the value of this property on chain, and I can own 1,000th of it, right? Or I can own 1/10,000th of it. And so now what you've done is you've identified a sector, right, of crypto investing, real world asset tokenization, and then there's protocols that are focused on specific niches. So you would say, okay, I think tokenizing real estate is going to be something that's going to like be needed in the future and is going to be popular. And now you can go look at your on-chain metrics and you can pick maybe the 5 top protocols that are working on that specific niche. You may say, I want to own some really high-end art, and I'm a huge fan of Picasso, but I could never afford to own a Picasso painting. Well, guess what? Maybe there's a protocol that it has tokenized a Picasso painting, and you can own as small amount of that Picasso painting, right, as possible. And so you say, wow, this is a really interesting use case. I want to find this project that I just found out about and maybe a few others, and I want to add that to my basket because I think that's where the future's headed. And so very quickly, I think the more you get in this space, you realize it's really disrupting almost everything. And so no matter what your core thesis is of where the world's going to look, if it includes accessibility to traditionally non-accessible investments or items, right? It could be a 1960 limited edition Mustang. Well, I could never afford the whole car, but I want to own a fraction of it. You've seen this done a little bit in Web 2, but it's hard and it's clunky. And so very quickly, this is kind of what we do at the fund is we identify sectors that we think are going to be really popular. There may be subsectors within that. And then it's like we want to own a basket of what we perceive as the market leaders. And some of those bets aren't going to work out. They're going to be too early or the market's not going to respond well. But the ones that do are going to really like make the portfolio. And that's really the approach there.
Absolutely. And I looked this up quickly while you were talking. A perfect example is imagine you were interested in owning gold, right? There's actually a project that has tokenized gold on chain that allows you to buy a token that is backed 1-for-1 by gold in a vault somewhere. And then there's actually a pool on Uniswap right now pairing that with another token, USDC, that's fully backed by dollars. And then you can earn 3.6% interest rate by providing liquidity between those two things. And that's just something that wouldn't be easily possible otherwise.
Yeah, not only not is it easily possible, it's not accessible for a lot of the world or for even a lot of the population in the US. So, I've interacted back in the day with some, buy gold, like Web 2 platforms. And you need to put like often at least $1,000 or $5,000 in. There's big transaction fees, right? There's like you're paying $100 to actually buy the gold. They hold the certificate of ownership. So if the site goes under or the company goes bankrupt, who knows if you can actually ever get your gold or the value of it. And you may only have $100 or $200 or $300. These products make so much sense to be on chain. And this is, what I think most people don't understand is what's so exciting about the asset class, why there's so much opportunity is, you tell somebody there's like 10,000 tokens or 10,000 coins, and they have a hard time understanding why that is or why that should even be until you start to understand, in my point of view, we've talked about this is just venture capital, and it's venture capital 2.0 because it's now liquid. So, venture capitalists go out, they find technology companies that are working on exciting new problems to solve that hopefully if they're successful will generate a lot of value to investors. But generally that money has to invest in private stock. It's not accessible to most people. And then, it's locked up. You have no way to really efficiently exit your position, usually for 5 to 10 years. Well, now you can invest in a lot of these technology companies. You can look at all the on-chain metrics. You can do all your research. You can be a responsible investor, but you can put just $100 in or $200 in, right? You don't have to write a minimum $100,000 check. And by the way, if a life event occurs or you're no longer excited about the team or what they're doing or the direction of the project, or you're just, hey, I talked to Patrick and I no longer think, Malibu real estate is on chain is a good idea, you can exit almost instantly, right? 24/7 hour markets. And I think it's important to look at it like that. It's also where I think a lot of the volatility comes from in crypto, right? So the volatility exists in venture capital. It's just not I was talking with a friend about this yesterday. It's just not seen, right? So if you were to price the value of that company every day, you'd see huge swings in the value of that stock. And but because it's not, investors kind of get to ignore all of this, volatility that's happening in reality because it's not actually reflected because these things are only priced every few years. But that's not an efficient market. That's an inefficient market.
Absolutely. The analogy I always use for people is I say, imagine if you could invest in apps on the App Store as soon as they launched. Do you think that would be volatile? It would be crazy volatile, right? You'd have things uh, doubling or tripling overnight when they went viral and then crashing as they lost popularity. And the difference with crypto is because you can invest in things usually from the inception, you actually get to see and price all those swings publicly.
Right. And somebody might say, well, Patrick, you can do that today, right? You could go talk to the companies that are launching the apps and invest in the company. But it's like, but can you really? Right. I mean, first of all, they're going to have minimum check sizes. Their rounds may be completely filled, right? Like they may not have any room or want to take additional investors. So it's like, if you just wanted to say, I want to put $10,000 or $1,000 into the top 10 app store applications that I'm really excited about, you really couldn't do that today, right? And that is something that is very novel to the space and very exciting.
Yeah, and I think that's part of why it's attracted so many enthusiastic investors as well. Because you have,
Right.
like you said, you have someone who's maybe not putting in very much money who would never be able to access those sorts of early stage deals on their own.
Yeah, totally. Well, I know we're getting close on time. Let me ask you if you could close with like any piece of advice for somebody doing contrarian investing, maybe looking at the crypto space as well. What do you think that would be overall?
Any piece of advice? I'm going to think on this for a second.
Sure.
My piece of advice for anyone who was focusing on the crypto space is you have the best access to fundamental data of any sector because it's all public, it's all on chain, and it's all updated in real time. So my recommendation would be to use it when you see people come in and they get burnt and they end up buying things that completely crash in value. Usually the signs were there ahead of time if you looked at what was actually what the fundamentals were of the company. And as far as contrarian investing in general, your audience probably already knows this, but I would say that the thesis, the core reason why you're investing in the asset class has to ultimately be developed from inside of you. Can't rely on other people validating it because if it's truly contrarian, then it's tough to guarantee that others will validate it. You have to have your own thesis.
Yeah, that's true. Don't get distracted by the crowd.
Exactly. Yeah.
And you've got a course, Patrick, that you
hmm
co-lead and have designed that helps
hmm
people walk through how to do this funnel analysis, right? Why don't you tell them how they can sign up for that or learn more about it?
Yeah. So I have a course that talks about this fundamental analysis. We do a cohort of it every 6 months, and so the cohort for this next month, November 2023, is sold out currently. But next one will probably be in another 6 months if we continue doing it. However, if people want something in the meantime, I also do a premium subscription newsletter on dynamodefi.substack.com, and this includes hours of pre-recorded videos walking through the fundamental analysis research process. Do several in-depth research reports every week, either talking about a current narrative in the crypto space or doing some sort of statistical analysis. So, for example, recently these exchanges we've been talking about, we did a statistical analysis of which metric has the best correlation with the exchange valuation, and we found that it was volume by a long shot has the best correlation. So that's the best way if someone wants to start learning about it. I think would be to subscribe to that.